Car Insurance in Australia 2025 Complete Guide. Car insurance in Australia is an essential part of owning and driving a vehicle, not only because it provides financial protection but also because it is a legal requirement in certain forms. Understanding the ins and outs of car insurance can be confusing, especially for new drivers, recent immigrants, or people comparing international systems. Australia has its own unique structure for car insurance, with mandatory coverages, optional policies, and industry practices that influence how drivers protect themselves, their cars, and others on the road. A full understanding of car insurance in Australia requires examining what it is, why it matters, what types exist, how much it costs, and what factors influence those costs, along with knowing how to choose the right policy for your needs. In Australia, one of the first and most important things to understand is compulsory third-party insurance, often referred to as CTP or green slip insurance in states like New South Wales. This insurance is mandatory for all drivers because it provides coverage for injuries or deaths caused to other people in a car accident where the driver is at fault. Without it, you cannot legally register a car, and driving without this insurance is not just risky but illegal. CTP does not cover damage to property or to your own car, meaning it is purely to protect other people who might be harmed by your actions on the road. Every state and territory in Australia manages CTP slightly differently, so the rules, providers, and costs vary depending on where you live. For example, in some regions it is included automatically with your car registration, while in others you must purchase it separately. Beyond compulsory insurance, Australian drivers often purchase additional coverage for broader protection. The most basic of these voluntary policies is third-party property damage insurance. This covers damage you cause to someone else's vehicle or property but does not pay for repairs to your own car. It is relatively inexpensive and popular among people who own older cars or vehicles with low market value, since they may not find it financially worthwhile to insure their own car against damage. For example, if you are driving a car worth $2,000 and you crash into a luxury vehicle worth $80,000, third-party property insurance would cover the damage to the other car, protecting you from financial disaster. An extension of third-party property is third-party fire and theft insurance. This type of coverage not only pays for damage you cause to other people's cars and property, but also protects your own car if it is stolen or damaged by fire. It is a mid-range option that gives a little more peace of mind than basic third-party property insurance, while still being cheaper than comprehensive policies. The highest level of cover is comprehensive car insurance. This is optional but strongly recommended for anyone who drives a new or expensive vehicle, or for people who simply want full peace of mind. Comprehensive policies cover damage to your own car as well as damage to other people's vehicles and property. They also often include additional benefits such as roadside assistance, new car replacement within a certain period of purchase, or coverage for natural disasters like floods and hail. In a country like Australia, where weather events such as storms, floods, bushfires, and hail damage are common, comprehensive insurance can save thousands of dollars in repair costs. The cost of car insurance in Australia varies greatly depending on several factors. One of the biggest influences is your age and driving history. Younger drivers, especially those under 25, usually pay much higher premiums because they are statistically more likely to be involved in accidents. Similarly, drivers with traffic offenses or previous insurance claims will face higher costs. On the other hand, people with clean driving records, many years of experience, and no claims history are rewarded with lower premiums. The type of vehicle you drive also has a significant impact on insurance costs. Expensive cars, performance vehicles, and luxury brands usually cost more to insure because repairs and parts are more expensive and because they are more attractive to thieves. In contrast, small, inexpensive, and widely available cars are generally cheaper to insure. Modifications to a vehicle can also increase premiums, since they may increase risk or make the car more difficult and costly to repair. Where you live is another key factor. Insurance providers calculate risks based on location, and areas with higher crime rates, more traffic congestion, or higher accident statistics will lead to higher premiums. For example, living in a busy city like Sydney or Melbourne may mean paying more than someone in a small rural town with low traffic. The level of cover you choose also directly affects the cost. Comprehensive insurance is naturally the most expensive, while third-party property cover is usually the cheapest. However, the cheapest policy is not always the best, since being underinsured can leave you financially vulnerable in case of an accident. Another factor to consider is how often you drive and how far. Some insurance companies now offer pay-as-you-drive policies that are cheaper for people who drive very little each year, such as retirees, remote workers, or people who use public transport most of the time. Excess, or the amount you agree to pay out of pocket when making a claim, is another important feature of Australian car insurance. Choosing a higher excess generally lowers your premium, but it means you will pay more if an accident occurs. This is a balancing act between affordability and protection, and many drivers adjust their excess depending on their confidence in avoiding accidents. Choosing the right insurance requires comparing multiple providers. Australia has a competitive insurance market, with both big national brands and smaller specialised providers offering car insurance. Online comparison tools are commonly used by Australians to check premiums, coverage, and benefits. However, it is important not just to look at the cheapest price but also at what is included and excluded in the policy. Some policies might exclude cover for certain drivers, certain weather events, or specific situations like accidents caused while driving under the influence of alcohol or drugs. Understanding the fine print is crucial. Many drivers assume they are covered in all situations, only to find out later that their policy had exclusions. For example, lending your car to a friend who is not listed on your policy might result in denied claims or extra fees. Similarly, driving for ride-sharing services like Uber or delivering goods for pay might require specific coverage that not all insurers provide under standard policies. The claims process in Australia generally involves notifying your insurer as soon as possible after an incident, providing evidence such as photos, police reports, and witness statements, and then waiting for the insurer to assess the situation. Many insurance companies now allow claims to be lodged online or via mobile apps, which speeds up the process. How quickly claims are resolved often depends on the complexity of the case, the availability of parts for repairs, and whether liability is disputed. Car insurance in Australia also plays a role in providing financial peace of mind. Without it, one accident could put someone into serious debt, especially if they damage a high-value vehicle or cause injury to others. With the increasing number of cars on Australian roads, the rising cost of medical treatment, and the unpredictability of weather events, being insured is a safety net that most Australians consider non-negotiable. At the same time, some drivers express frustration at rising premiums. Insurance costs in Australia have been increasing due to inflation, supply chain issues that make car parts more expensive, and a general rise in accident repair costs. Some drivers feel they are paying more each year despite not making claims, and this leads to frequent shopping around to switch insurers for a better deal. Many Australians take advantage of multi-policy